the market is always doing one of two things. The market is always either offering fair value or seeking liquidity. It's our job to find out which one of those two things the market is doing. Now, you will know the answer in 3 steps. We have market structure, then we have a fair value area, and then we have liquidity as the last step. This high that you are seeing is an intermediate term high, and this low that you are seeing is an intermediate term low. These are what I call outsiders in the market. Now, the reason why these are important is because when we have a bullish trend, we will respect intermediate term lows like we see right here and not trade below them before we continue higher. Now inverse that for a bearish trend and we don't trade back above the intermediate term high unless something specific happens. And that's what we're going to touch on in liquidity in step number 3. Now to be a bit more specific, an intermediate term high, this high right there, is a swing high that has a lower swing high to the left of it and a lower swing high to the right of it. And an intermediate term low is simply a swing low with a swing low higher directly to the left of it and higher to the right of it. Now, if you take the area from an intermediate term high towards the intermediate term low, then you get an incredible, amazing concept, a fair value area. This fair value area is the answer to know what the market is doing. It's either offering fair value or seeking liquidity. Now, how? Let's break it down. The market is consistently busy with offering fair value, which means that when we move higher with this lag right here, we have now offered buyers a fair chance to get involved since we have been moving higher. That is lag number 1. Then what we see after is when we create this retracement, we have the second lag. So the second lag is where we now give sellers also a fair chance to get involved. So we're offering that fair value. Now, once the retracement is over and we move higher right there, we now have had, again, buyers, sellers, and buyers again getting a fair chance to get involved. Now, once we trade above the first lag high, which is what? It's an intermediate term high. We have now offered both buyers and sellers a fair chance to get involved. So from this intermediate term high towards that intermediate term low right there, that second lag retracement, that is the fair value area, because this is where fair value has now already been offered. Both buyers and sellers got a fair chance to get involved. But this area, again, is extremely important because this tells us if we are either offering fair value or seeking liquidity. So how does it do that? Well, if we look at those lags again, then where is the only area right now that we have not offered fair value just yet? Above the intermediate term high is the only area where we have only offered buyers a fair chance right now. So if the market is going to offer that fair value, then what is it going to do? It is going to create a retracement back into the fair value area to then continue higher from it. To also give sellers right there a fair chance to get involved. And that allows the market to continue higher. Now, the reason why I now select the bodies right there instead of the earlier wick that we had is because of the fact we need to understand if the top of the wick right there, the top of the fair value area is not exactly overlapping with a fair value gap towards the right there, that means we're going to select the highest bodies in that fair value area instead. So if the market is going to offer fair value right now, it's going to retrace back into the fair value area to also, in this retracement, now give sellers a fair chance to get involved to then, again, continue higher right here. This is what offering fair value looks like. Now, where does liquidity come in? Because we know if the market is always offering either fair value or seeking liquidity, we can have a good idea of what the market is doing at all times. First, where is that liquidity? Well, liquidity is above swing highs and below swing lows. So a fair value area low, what is that? That is liquidity right there because it's an intermediate low, which is a swing low. So there's liquidity. Then how do we know if we want to potentially target this liquidity? Again, by what we have just determined. Now let's go into the 1 hour to see the specific pattern that we use in the MMT. We understand right now that the only area where we have not offered fair value just yet is above that intermediate term high towards the left, above the fair value area. So once we have the retracement back into the fair value area, like we see right there, we have now offered fair value. So both those buyers and sellers got a fair chance to get involved. So there's no reason anymore for price to create a deeper retracement than this. So if it wants to continue higher, it should continue higher from the fair value area high. Now, if this pattern happens and we try to push higher from this fair value area, but fail to do so. And instead, we create this bearish fair value gaps. That's our signal right now that we are not offering fair value anymore. And if we are not offering fair value, then what are we doing? We're seeking liquidity. And where's that liquidity? That fair value area low.